Assalamualaikum warahmatullahi wabarakatuh. I would like to say thank you for coming to my YouTube channel. Let me introduce myself. My name is Arlanda Reni Putri. I'm from Management Class 20A with NPM 2241141. Okay, my friend, in this presentation we will discuss about capital marketing. What is capital market? Definition of capital market. Capital market can be divided as a market for medium to long-term financial instruments. Financial instruments trade in the capital market include shares and bonds issued by the Australian government, state government, corporate boards, and financial institutes. The other word is the capital market or security market is the market for securities where companies and the government can raise long-term funds. The capital market includes the stock market and the bond market. Third, agent capital is security market. An engine of growth is increasing integration, and the last best regulated market is regulation framework. Main element of capital market. Three elements of capital market is financial asset or instruments or securities, second financial intermediaries, and third financial market. The main elements: financial asset or instruments or securities. The tangible or physical asset is one whose value depends on this physical property, such as building, machines, furniture, vehicles, and so on. The entity or economic unit over that future cash flow in the insurer of the financial instrument, and the owner of the security is the investor, depending upon the nature of claim or return an instrument may be. First is debenture of bond. Debenture of bond is a debit instrument indicating that a company have borrowed certain sum of money and promised to repay in the future under clearly defined terms. Second is truth or bonds. Indenture is a complex and likely legal document starting the condition under which a bond has been issued. Third is debenture redemption receipt is a requirement in a debenture indenture providing for the systematic retirement of debenture or bonds prior to their maturity. Fourth, term loans is a loan made by a bank financial institution to a business having an initial maturity of more than 1 year. Next is equity capital. Equity capital represents ownership capital, as equity shareholders collectively own to company. They enjoy the rewards and risks of ownership. Some term authorized equity or share capital is the number of ordinary share capital that a firm can raise without founder shareholder approval. Next is issued share capital. The portion of the authorized capital offered by the company to the investor is the issued capital. Next, subscribed share capital is the number of shares or capital outstanding. Preference share capital is a unique type of the long-term financial in the combined sum of the future of equity as will a debitor. is carry a fixed rate of the dividend, and it ranks higher than equity is a claimant to the income or asset. Initial public offering or IPO. The first issue of the equity share to the public by an unlisted company is called initial public offering or IPO. Cumulative dividend preference shares. The preference share of the which all unpaid dividend in are small the point along with the current dividend prior to the payment of dividend to other shareholder. Star right preference have strike preference share value or price is the price at which a preference share would be without the redemption or call filter. Convertibility. Preference share capital may sometimes be convertible partly or fully into equity share or debenture at a certain ratio during a specific period. A variant in Indian is cumulative convertible preference share with combined the cumulative and convertibility feature. It has, however, been a non-starter for so far. Convertibility debenture gives the holder the right or option to change them into the start number of shares. Conversion ratio is the ratio at which a convertible debenture can be exchanged for share. Conversion price is the per share price that is effectively paid for the share as the result of exchange of a convertible debenture. Financial intermediary. Financial intermediaries are institutions that channelize the saving if investor into investment or loans as institutional search of financial. They act as a link between the saved and the investor, which result in institutionalization of personal savings. The main function is to convert direct financial assets into indirect securities. The indirect security offer to the individual investor better investor alternative than the direct or primary security by polling which it is the carry, for example, units of mutual fund. Financial market. Financial market perform a crucial function in the financial system as facilitating organization. Unlike financial intermediaries, they are not a source of funds but are a link and provide a forum in which supply of funds and demanders of loan or investment can transact business directly. The two key financial markets are the money market and the security market. First is money market. Is the created by financial relationship between supply and demanders of short-term funds having maturities of the year or less. Second is securities market. Is a financial relationship carried by a number of institutions and arrangements that allow supply and demand of long-term funds with maturities extending 1 year to make transactions. Type of market is a primary market and secondary market. Primary market. The primary market deals with the issue of new instruments by the corporate sector such as equity share, preference share, and debenture. Fund of primary market origination in the work of investigation and analysis and processing of new issue proposal. Underwriting is a form of guarantee that the new issue would be solved by eliminating the risk arising from undertaking of public response. Distribution in the shape of the unlimited investor. Secondary market. Stock exchange is three vital functions in the order growth of capital formation. The first nexus between saving and investment, second marketplace, and last continuous price formation. Capital market glance. Second faster growing economy after China with an average annual growth rate of more than 8% in the last 3 years. Indian companies may issue shares under employee stock option scheme to its employees who are resident outside. Foreign institutional investors are allowed to invest in India under the Foreign Institutional Investment Scheme. Private equity is allowed and the alternative from investment. That's all my explanation. Sorry if there are any wrong words. See you in the next video. Don't forget to like, comment, and subscribe. I'll end with wassalamu.